Hello and welcome to the Investing Master Series. My name is James Boyd. We welcome you on this Tuesday morning, June 24th. Almost feels like 4th of July coming up. Speaking of 4th of July, we'll talk about some of these stock charts that we're seeing as well. My name is James Boyd. I normally teach at this time. This is live and also recorded as well. We'd like to welcome all of you, Billy, Sharon, Bill, Dom, BJ, Michael, and many others. Good morning to you. Also, just real quick as we get going, I want to give you a heads up that if you have any questions, go ahead and actually type those in the chat space. And so I'll be looking for those. And I'll also be kind of prompting you with some questions as we go and asking you, what do you see? Okay, so don't think that this is a lecture for 45 minutes. It's going to be kind of more of a discussion. Okay, now just real quick as we get going, remember I do post educational content on X. There's my handle at James Boyd CS. And also, as we get started here today, our examples, when we talk about Investing Master Series, we're talking about stock investing. We're talking about option investing. And the options that we tend to talk about are like cover calls, cash secured puts, verticals, debits and credits, okay? We don't sometimes we also bring up callers and synthetics. We really kind of focus on 5 or 6 main option strategies that tend to be kind of more focused on trading direction. Okay, to some extent. So just know that we won't typically talk about iron condors or anything like that. We're trying to pick a direction, okay? Now, also remember that options carry a high level of risk and are not suitable for all investors. The information provided here is for general informational purposes only. We'll use the Paper Money software application for educational purposes. Investing involves risk, including loss of principal. And also remember when we talk about examples, they are just that. Short options can be assigned at any time. These are American style options. You need to know that. And what does that really mean to be assigned? We know if we have like a covered call, if we have a covered call, that could actually, someone could want those shares prior to expiration. If we sold the put, for example, that could be that we buy the shares prior to expiration, okay? It's not just at expiration. Make sure you go through the online course to really make sure you're clear on that. So anytime you have an obligation, it can happen prior to expiration. And also remember when we talk about our examples, they are just that. Also coming up this weekend, we're going to be in New York City doing the Market Drive, June 28th at the New York Marriott Marquis. And also we're going to be coming back to New York and actually on August 8th and 9th. That is a 2-day event. That's first day technical analysis, second day option strategies. And also we'll be coming to Chicago, the Renaissance Schaumburg, and we'll be there as well. Now, you can go to schwab.com/events to get more information. Now, what we do is if you go to schwab.com/events, you'll see the calendar for the whole entire year. Usually it's inside 3 months, okay, where you can register for the event. It's free if you're a Schwab client. So we want to make sure you're aware of that. So quick heads up as we get going here. First off, I want to kind of talk about kind of some of what we've seen in the last 24 hours. Been a busy 24 hours. And I want to kind of start with just real quick, if you don't mind, the SPX for just a moment. So if we take a look at this, if we zoom in, and what I'm going to do is I want to kind of go down to like a 15-minute chart. I normally don't do this, but I want to kind of show you sometimes how that news can affect a little bit as far as what's happening. Now, this right here, this shaded portion on the right-hand side, okay, the shaded portion right there, that's after-market activity, okay? And since we're talking about the SPX, the cash index, we don't have after-market activity. That's why you don't see any candles. Now, if you saw futures, okay, or you could see that movement. Now, if we take a look at this, you're going to see that right about, 12 o'clock, okay, my time, or 2 Eastern, in the last 2 hours of the market day, started to hear some rumors about the Israel-Iran ceasefire, or the potential ceasefires, we should say now. Well, if you take a look at that, the market kind of started to go up in the expectation of that. Now, if we look at now it's the intraday. If we look at go back to the daily chart and say, how did the SPX close yesterday? Well, the SPX, if we zoom in on that, you're going to see that where we closed yesterday with the close, okay, we closed where the moving averages went back green with that move And also, so the 10-day and the 20-period moving average went green. Now, at the end of yesterday, could we say at the end of yesterday that we really broke resistance? Couldn't say that because we weren't above that 60.42 level, okay? So overall, it's like it was a nice close. The moving averages changed again. Did it break resistance? The answer was no, okay? In the last 2-3 weeks, we've kind of been neutral at best, okay? And kind of maybe even slightly drifting down. Historically, when you look back on that, was that inaccurate? It is about right, okay? Now, the difference is today, we're throwing in the question, is today different? That's a question. Is today different? Is today just another green candle below resistance? We can't say that, okay? Maybe this is different so far. We see when we talk about breakout criteria, we talk about, does it open above resistance? It has. Are we closing above resistance? If we close here, it would be. And is it a green candle? The reason why we want a green candle is that we want the closing price above the open, okay? In other words, we don't want something that opens up higher and then closes lower on the where it opened. That's a red candle. That's not what we're talking about when we talk about a breakout. So this has been the first time in the last, let's say, if you go back, May 19th, fast forward to yesterday, June 23rd, where we actually get out of this consolidation range. Now, let's kind of just be crystal clear. Is the portfolio, okay, sample portfolio, is it bullish or bearish? Can anyone give me the answer to that question? Well, if we kind of brought up just the IRA and we said, is the portfolio bullish or bearish? We look at Delta, which is going to tell us, are we bullish or bearish? It's going to give us the individual positions. And if you look down at the bottom, it sums them all up. And it says the Delta is 823. Well, the higher that number is, the more bullish the portfolio is and trying to get that sensitivity to that direction. Bullish. So when we take a look at this, if the VIX falls, okay, and the investor's bullish, they probably like the VIX falling. Now, that doesn't necessarily mean that everything is hunky-dory for the VIX trade, which is down $85. You would sure think that these positions would outweigh one bearish trade dropping, okay? And I'm talking about the VIX. Now, when you take a look at the SPX, so the material difference so far, need to see it close. Can we close above this range, okay? So we don't know what's going to happen in the next hour. We don't know what's going to happen the next day. What we're trying to do is we're trying to get the direction right over the 2 to 3 weeks to 2 to 3 months. And is the direction right? Hence, the portfolio has been postured bullish. That's very important you understand that. I don't know what's going to happen the next hour. I don't know what's going to happen in the afternoon, okay? But we're trying to actually can we get the direction right on the market? Now, when you go back and really look at this, we've been talking about this V pattern, right? V patterns are some of the most bullish type of patterns we see. That's why we've talked about continuation patterns, et cetera, and breakouts, okay? If you look at actually the SPX, it looks like we're kind of right up near resistance. We talked about on Friday how the international markets have dropped somewhat. They probably bounced back, but we're questioning, could some investors be getting back more allocated to U.S. markets? And if we kind of said, are they? Well, there's a higher low forming on the weekly chart. That's a nice start. Might that continue here? When we look at actually the NDX, okay? The NDX, same point as far as the SPX, okay? If we look at, let's say, the SPX, what you're now going to notice is the SPX, did it close above resistance yesterday? It did not. So we could say yesterday it had a nice close, didn't close above resistance. We back this off and we say, is this different today? We have to say it's different today if we can close here because it's getting above that range, just like the SPX. And if you look at the SPX, okay, and the NASDAQ, they look identical. Briefly, when you look at the Dow Jones, is the Dow getting actually some movement as well? Is it above resistance? Maybe, okay? Struggling, I can't say it's above resistance yet, but we're right at it. Notice the Dow has lagged a little bit. Now, that doesn't mean all Dow stocks have lagged. I mean, just go look at Goldman Sachs, Caterpillar, JP Morgan, right? Hold on, some of those stocks have shot to the upside, Now, you take a look at this, the Russell, okay? The Russell it's also lagged like the Dow, getting a little bounce here. Some of you like small caps. Some of us like large caps, okay? That's why there's a little buffet for everyone. And if you look at that, that's kind of like a little bounce set up for the small caps. What do we take out of the small caps? Are investors willing to take risk? And when you look at the semiconductors, SOX, the SOX, tell me what you see here. So when we're talking about kind of risk taking, so the point I'm making, and I'm going to conclude, the breakout wasn't yesterday. The breakout is happening this morning. And if we can close here, this will be the first time we've actually gotten outside this range. So this is fresh. This is not like 2 weeks ago we broke out. The breakout is happening this morning. We'd like to see where it closes. That does not necessarily mean the investor has to wait till the end of the day, okay? But they're just saying, hey, we're talking about a breakout. Can we close here? The close is at the last 90 minutes of the day. Are there any questions with that? Luke says, sorry, I'm late. Luke, we forgive you. Okay. All right. A little fun there. Now, all right. Now, I want to also go back to just real quick. Let's fast fire kind of some sectors. Okay. Sectors. First off, gold. Okay. When you take a look at gold, we're just kind of looking at where gold is. Gold with on the quote positive news, it's actually dropped. The paper money account does not have a gold position. The position that it actually has is in NEM, okay, which is down $1.35, which is related to what gold prices do. Now, it also, if you take a look at, let's say, what's happened with crude, we talked about going short crude oil on Friday, and that really came from when you look at the pricing of actually crude, there was a pretty good premium on the front dated contracts of crude. I'm just going to show you the chart, okay? There you go, okay? And I'm going to move to the next one. Now, we'll talk about Chevron in just a moment, okay? Now, if we take a look at, let's say, the sectors, if we pull up the sectors just real quick, some of the ones I want to kind of point out is, clearly when you look at IXT, the technology sector, doink, okay? And when we say doink, some people just call that like a breakout. Doink, like on the price graph, okay? Now, when you look at, let's say, the IXM, the financial sector, that is also breaching back above 625, okay? And when we also take a look at this, the other ones that are kind of standing out, IXY, the discretionaries, is it breaking out? Can't say that, but it sure does look like maybe a diagonal resistance breakout setup. You can even kind of say that it looks like a flag. Now, Mrs. Barbara Armstrong is with us here today, and she's going to teach us how to say fleeg, okay, or flag here in the U.S. And if you take a look at this, and Barbara, we got to have a little fun with you. We can't just let you just sit here and we got to include you. Don't worry, okay? I've been to Toronto so many times. I grew up in upstate New York. Love the people in Canada, okay? I told you before, you don't mess with Canadians. I told you that. Now, if you look at this, if we're talking about discretionary, what are some stocks that could be correlated to the sector, okay? And it doesn't necessarily have to be smaller names. It could be bigger names like NVIDIA, Netflix, among other names. What stocks are getting that movement there? Now, when you look at also other areas, I'm going to bring up the communication. The communication, if you take a look at this also has like a continuation pattern on it. You had a prior high, you actually had these lows, you had a higher low, and remember what we said, support levels take time. It's not just going to happen in 1 or 2 days. Good support levels take 1, 2, 3 weeks to really create support levels, okay? And you can even say on communication, old highs becoming new potential supports. We would never say language such as it's too high because we know better that if it's too high, it just actually means that, for example, it's actually at a high, and if you make a higher high, there could be a higher low. That's what trend is, okay? Now, also, if we go back, I'm going to also keep an eye on the industrial sector. We've kind of marked this for weeks now, saying it's probably not likely to have a recession if you get industrial smashing to a brand new high, okay? Show me any historical example where industrials are hitting brand new highs and you have a recession, okay? In the last 25 years, That's not what's happened. Okay. If now that doesn't necessarily mean it's going to be that in the future, but why would the industrials be going up if it was truly going to be a recession countrywide? Now, go back to the when you go back and look at the energy has dropped on the daily chart, as you would imagine, relationship to oil. We'll talk about those positions in just a moment on Chevron and ConocoPhillips. Now, what I want to do here is I want to take a quick look at a couple positions that are in the paper money account. And if we go to the paper money account, what I want to do is just kind of talk about some of these. So first off, a couple stocks that are in the Dow that are getting a little push. Most of our examples lately have been in the Dow because there's been some pretty strong moves in the Dow. Please do not feel like you have to create this specialized watch list, okay? Sometimes I think we kind of miss Captain Obvious, and I just want to get rid of this. We kind of miss Captain Obvious in just some of these main. Try to get rid of that. There it is. Okay, there it is. Now, so when you look at, let's say, the Dow Jones, what you're now going to notice is if I said, let's just rank this to percentage change, and if I kind of said, look, here's kind of the percentage change for the day. Stocks like Goldman Sachs, stocks like actually Amazon, stocks like American Express and so on, having some pretty big pushes. Now, remember when you talk about, let's say, the push, is that push dollar-wise, percentage-wise, is it leading to, let's say, a bounce setup, hold? If I actually look at Goldman Sachs, which the paper money account has, it's a bounce setup, it's a breakout setup as well, and it's showing a little continuation. You look at a stock like Amazon, it's showing a bounce and actually a breakout setup. You look at a stock like an American Express, okay, you got to see a bounce. You're having a bounce setup currently. Could it continue? But it's also even showing like a moving average crossover as well. And that breakout, it's really showing as of today. Now, here's the thing that kind of blows my mind, okay? I got to make some new watch list that is specialized for me. Why? What's wrong with some of the stocks right here? Okay. And I think sometimes people just make it a little harder. Now, what I want to do is I want to kind of speak to just real quick AMZN for just a moment. Okay. Now, if we looked at AMZN just quickly and we kind of drew support and resistance on this. Now, first thing I want to kind of just double check in the paper money account, is there any position in AMZN? Let's just double check, okay? So what I want to do is I want to pull up just the trade tab, AMZN. If we had a position, one way we could see it is in the IRA. We don't. It would show right there. We don't have anything there. Margin account. Do we have anything? We don't have anything. Okay, yet. Now, what I'm going to do is I'm going to go back to this and kind of look at this diagonal line that we're creating. So we're going to talk about putting on some new positions. And we're also going to talk about current positions, okay? Because this is real life. You're managing a portfolio, but you're also saying what might actually the investor add to the portfolio. Now, when we talk about Amazon, we're talking about something consumer discretionary based. We saw the sector. Now, some people might say, well, I'm going to wait until we get above 216 to get in. Okay. Other investor might say, well, I'm not really buying. I'm buying because I'm trying to buy closer to support, thinking that we could make higher lows. And if we actually broke inside this old channel, okay, it might try to really go to 232. It might try to go to 241. We don't know if it's going to go to there. Those are just prior highs resistance areas. Now, in this class, we want to be very familiar with verticals. Why? Well, because verticals, it doesn't take as much capital. Why verticals? Well, it's less sensitive to direction. Why verticals? Well, the biggest actually thing about verticals is if you're trading these bigger dollar stocks, which are higher price meaning it allows the investor to actually take a trade bullish or bearish, okay? And it just is not tying up as much capital. So it gives us the ability to trade these, but we don't have to do thousands of dollars of capital to do the trade. So verticals for some investors, a pretty important strategy, okay? Now, if I went to Amazon and let's say the investor said, you know what, James, I want to kind of try to have a position that might be more geared to a a higher potential gain. That would be like a long call vertical. If we actually said, hey, I want to trade more probability based, that would be more of a short put vertical. Okay. So if we chose something that was more at the money, like buying a long call at the money, strike on the stock price, about the same. And if we, for example, said, look, I'm going to do, let's say, now if we did the 212.50, do those ones have liquidity? 10 cents, but the open interest there is 165. So when you get these $2.50 wide strikes, sometimes that liquidity, open interest, is not the same. So we're going to go the 210, which is a little bit more in the money. Okay, let's say it's at the money within 1%, and we're gonna buy the 210, and then what we're going to do is we're going to sell the 215. What we're going to do is we're going to right click on that 810 buy, and we're going to go to vertical. Why are we doing this trade? Well, we're trying to do a bounce trade off of the support level. When you say a bounce trade, what do you mean by that? Well, we zoom in, we drew a diagonal line, and we're kind of coming off both those areas. We've pulled back, we've pulled back, we've pulled back, we've pulled back. And if we can close here, this would be close above the high of the low day. When we say low day, we're talking about the most recent red candles. Uno, dos, tres, cuatro. Okay. Spanish isn't that good. But if you look at that, you're going to see that overall, that low so far was yesterday. If we close here, that's why there's that green dot, hence close above the high of the low day. So why do some people try to buy right off support? Well, they're saying if I'm wrong, the investor could say, look, I'm just going to set that stop or the trigger to be sold. We talked about conditional orders the other day. Okay. If we go below that 208.22, the investor might say, I want to get out because that bounce trade is not holding. That's why. Now, let's bring it back up. We're going to actually do the 210 and the 215. Debit 290. Get a $5 wide spread, 290 debit, 210 maximum gain. Pull it up on here. Now we got to ask ourselves, well, how much could we risk? Well, the max loss, if we're trying to keep it 1% of the account value, we can't go 2 contracts. We're going to go 1 contract. If we go single account, go multiple accounts, we're going to take 3 contracts in the IRA. Now, this is what the paper money account does. We try to trade stocks or strategies that could be implemented in the margin and the IRA, but just at a different position size. Okay? So 1 in the margin, 3 in the IRA. You're now going to notice that when I actually do this, it adjusts the max profit given the vertical and the max loss for the 4 aggregate contracts. Okay? But we see the buying power effect is really what the max loss is given a vertical for that account and for this account. Okay? And you're going to see the commissions will be adjusted for now doing 4 contracts. Okay? Now, if we take a look at this, snooze that, okay, send that order. So first trade we're actually doing based upon what we saw in discretionaries. We're trying, now again, if you said, well, how would I have maybe really known? Now, guys and gals, this question is kind of like, is someone really paying attention? And I say that just to make sure we're all on the same page. If we go to Market Watch, if we go to, let's say, Visualize, I try to teach the most basic way to search. I think people can go down the black hole for searching, and sometimes the information is right in front of my face, and I'm just trying to make it too complicated. If we went to Market Watch and Visualize and said, what are some of the stocks in consumer discretionaries, you're going to notice that half of the grid, okay, of discretionaries is Amazon. Now, is that guaranteed to go up? No, don't know what's going to happen tomorrow. You got to also remember what we've been saying for weeks. When we talk about volatility, volatility tends to be like weather. It doesn't always tend to last forever. We're not investing for what happens the next day. We're investing in what's going to happen in the next 2-3 days to 2-3 weeks minimum. Okay? And you need to understand that. We're trying to get the direction right over time. The sweet spot is probably that 2-3 weeks because we know with trends, it's not just what happens in the 3 days. It's what really happens over that 2 to 3 week time period. Did the investor get the trend right? Okay. Now, if the investor said, well, I want to go to the S&P 100 and I want to kind of see a bigger list of stocks, James, well, if I pulled up a bigger list of stocks, you're going to see that Amazon is still a big chunk. So if discretionaries are going to go up, it's going to tend to go up through that area of Amazon, or there's some exposure there. The one thing I do want to point out is we did see actually the ships, cruise ships, get a little push here today. So if you like Royal Caribbean, you got CCL, you also got Norwegian Cruise Lines, etc. They're also getting a little push here today with the market getting going up a little bit. Now, so trade number one was Amazon, okay? Now, are there any questions? Now, the comment, if we go back to CCL, you are going to see that CCL had been grinding over time. Looks very much like the market, okay? Where we kind of had some higher lows over time, a resistance, and you're going to see that it poked to the upside. Some people use the word poke as an example or kind of a descriptive term for a breach of resistance, okay? So now, if I go back to something just real quick, tell me what you see on NVIDIA. Tell me what you see on NVIDIA, okay? Now, if we look at NVIDIA, I'm going to kind of look and see just real quick, is there any position in the paper money account? Now, as I pull this up, I'm going to go back to the trade tab for just a moment. Do we got anything there? NVIDIA, I don't see anything in the total all accounts. Let me just double check. Nope. Okay, actually, so in the IRA itself, we do have a position, and we see that position here. We have, is this a classic vertical, or is that more of like a cash secured pet? What is it? Well, it's not your typical vertical. Most spreads are not $20 wide, unless we're talking about something like $1,000. This is really more of like a cash secured put. That 115 is really more downside protection and buying power reduction, okay? So the goal of the cash secured put is to sell when the premium is high and buy it back as close as we can to zero, okay? Now, we talk about, for example, if we can get 50%, okay, 50% in first 10 days, okay, 10 days. I mean, this is like getting 80%, but you don't have to get you don't have to go closer to expiration. If we got 65%, okay, and there's 20 days plus, okay, that's like getting 80%, but you don't have to wait all the way to expiration. If you get 80% ever, okay, the investor might say, well, James, I'm trying to make the last 20%, but I potentially have 80% in my hand. Now, what fraction do we actually see on that we talk about quite a bit? That's a 1-to-4 ratio. So when you have like a 1-to-4 ratio, some investors say, is it really a good idea to try to make the last 20%, which might be pennies, and risking 80% of what they have unrealized gain in their hand, and they're risking more? It's at least a 1-to-4 or worse. Now, when we come to this trade and we ask ourselves, well, where are we in this grid? We're at 73%. So if I go here, am I hit 50%? I'm in there. Okay, we're past that. I'm at 65%. We got 20. So this is kind of where we are. Okay. Now, if I take a look at this, we're at 24 days to expiration. Okay. Now, could you actually have an 80% return even though there's more than 20 days? Sure. It just probably means that the stock went up a lot in your favor. Now, what we're going to do on this trade is we're going to exit this trade, but we're going to roll the position. Now, the reason why I kind of changed my voice like that is I want to make sure that we're crystal clear, is we're going to just the details, okay? Have you ever listened to a presentation on the stock market, and we're going to talk about what's happened with the S&P historically and how the dividend yields relate to the relative valuations of stock? I mean, you're like, wake up, okay? So when I change my voice, there's a reason why I'm doing that, Okay, the same person then asked me the question that I stressed my voice in to make sure they were crystal clear. Okay, so I just want to make sure you connect why I do that. Now, what I'm going to do is I'm going to buy the short put back. Buy it back. We still have the long put. If I buy the short put back, I'm leaving the long put. Why? We're going to find out in just a sec. We're going to sell. We sold that short put to get out of the trade. We've got to buy it back. We're going to buy +1. Now, what we're going to do, now you could do this in one of two ways. Number one is if you could say, well, James, I'm going to roll the position. Fine, but I'm going to do it kind of just baby step, okay? Let's do it the simplest way. Just buy it back, okay? We're going to buy it back. So we sold it for $4.25. We're going to try to buy it back for $1.10 and try to make that $314 pre-commission. Once we actually do that, go confirm and send, there's the commission right there, okay? Now, what we're going to do is we're going to send that order. We still got some time here, okay? What we're going to do is we're going to stay in the July expiration that still has 20 days to expiration. And we're going to try to say, look, could we go up a little higher up on the strikes? The strike that we had was the 135, which we're not even on the table anymore. What we're going to do is we're going to say, could we just go to a new strike, meaning a new position, and say, could the investor maybe say, I'm going to try to sell a strike with a delta of 30 to 40 again? And what we're going to do is we're going to pick a delta between 30 to 40. Now, there's a couple options here. This one, this one. If we have dollar wide strikes, that's going to happen. So what I'm going to do is I'm going to go to the 35 strike. Now, why would you go to the 35 strike? If you go a higher delta, okay, if you go a higher delta or strike, you're really saying you're more confident in the direction. Now, you could say that and be wrong, okay? But if the investor said, no, James, I'm pretty confident in the direction. I like what the stock is doing. I like what the market is doing. I like what the industry group is doing. I like what the sector is doing. I think I have the wind at my back. I might be right, okay? All right, so if the investor feels like that, and there still could be wrong, we're going to go ahead and click on the 291. We're going to sell the put. And this is just kind of the manual way of rolling. Step one, get out of what you have. Step two, enter the new position. And we're going to push it to 294, try to get that. 293 now, confirm send. There's the commission, enter the position. Now, what you're going to notice is, why did we not sell out of this? Because we're going to use that still as the downside protection. How is it protection? Well, when you buy the put, it gives you the right to sell the shares at the strike price. Okay? Now, the biggest actually thing is when you look at that 115, we're going to hold that, got 24 days to actually still have that work and have that right. But really, if the investor said, is this a new position? The answer is, it is a new position. So trade number one example was Amazon. Trade number two was actually NVIDIA. Okay? So don't think of this, no, this is just a past position. If you put on a new strike, that is a new position. Okay? Now I want to go back to just real quick. Some of the stocks, I want to kind of flash through a couple. Goldman Sachs, okay? Now, we talked about Goldman Sachs. Let's kind of show where the paper money account got in and how that position is doing now, okay? Now, if I went back and said, does the paper money account have a position? The paper money account has a position. We bought the 620 call, okay? 620 call, which is a bullish position, and sold the 625. It's up 42%, and I know how the investor feels. You always want more, okay? You always want more. That position was put on 12 days ago, okay? Now, remember when we talked about if you can get 50% in 10 days, it's like 80%, but you just didn't have to wait until closer to expiration. So it's still working. Now, the question I have for all of you, now it's not 50%. Now, IBM, we're going to have to come back and say, did that get sold? What happened there? Let's hold that for just a sec. But if you were at maybe an area of resistance, would you maybe say, James, I know I wanted more, but I'm in an area where I think there might be some profit-taking behavior. Does anybody actually think maybe the investor might sell into the area of resistance? Now, remember, if we went back to the 12th and say, where was the entry made? The entry was made right there. I want you to notice something. The next day, the stock went down. It doesn't mean it got stomped out, but the next day it went down. Okay. Did it break that support level? It did not, but the next day it went down. Okay. Now, what you're going to notice is it kind of the idea was if it broke inside the old channel, could it go up to the top of the channel? It has. Okay. So what the paper money account is going to do is it's going to come in here and say, you know what? I'm going to try to sell based upon the objective. And the objective was to get it to break inside the old channel, resistance, and try to go to the next level resistance. This is not saying it's not going to get back in, but it just met the top of the channel. Now here's the thing. I remember the first time I did options, I thought that if I bought options or sold options, I thought I could not get out prior to expiration. It's not true. Now you have to check the liquidity, okay? But this is like just how long those options are good for. They expire, okay? So I like to think of it like food. If I buy food that lasts 24 days, if I buy something that lasts 24 days, I put it in the fridge, I could eat it today, I could eat it 2 days from now, I could eat it 3 days from now, and so on. I mean, but after 24 days, if it's in the fridge and it's expired, you might say, hey, look, I'm not going to eat it. Think about it like that in terms of your mind. It's yours, okay? You have a right or an obligation. I'm going to right click on this, create closing order, and what we're going to do is we're going to sell it. Now, what we're going to do in this case is, now remember, this is a $662 stock. But how much capital what did it really cost to get into this? It's about $1,000. So we had about $1,000 debit and the profit loss open was 400. So it's like making 40% on what the original investment or debit was. Okay. Now what I'm going to do is going to go confirm and then send the order. Now, if someone says, look, I'm going to profit take into a level of resistance, they might say, well, James, where might the investor try to get back in? Answer, what is it? If the investor said, James, I'm looking to get back in, they might say, what I'm going to do is I'm going to kind of look and see if it can come down to the midpoint of the channel, which kind of sometimes might be the support level. I'm going to set an alert. And if I set an alert, I'm going to create the alert and say, look, if we go at or below the midpoint of the channel, I'm going to try to get back in on that little different price action. Okay, create. Now, what you're now going to notice is, it's just right that I like to set the alert. Why do I like to set the alert? Because sometimes as people, we forget things. If it goes down to that price level, we get the alert on the platform, email, text, whatever, however you set it up. The investor might be looking for a bound setup. I want to also go back to just real quick JP Morgan. Remember, we kind of had that funny discussion that Jamie Dimon was talking about the U.S. is going to a high probability of going into recession. He's been wrong so far. Eventually, he'll be right, okay? His stock, for example, went to a brand new high here today. I'm sure he's really upset, okay? Now, if you take a look at, let's say, the JP Morgan, the reason why we need to bring it up is we could have just fallen for that. Jamie Dimon said this, Jamie Dimon said that. Look, the technician is not interested in what people say. And this is what's the hardest thing about technical analysis. If someone says something, including myself, it's their viewpoint. It's their idea. Doesn't mean it's accurate, okay? The investor is trying to put on a trade that matches the trend, okay? They're trying to trade the current direction, wondering if it might continue, and they're trying to play the probabilities, which is the math, okay? That's really what they're trying to do. Different viewpoints is viewpoints, it's opinions, okay? Now, what you're now going to notice is this trade was really more of a cash secured put. Now, you're going to notice that on JP Morgan here, we sold the 265 put, and we sold it for $6, and now the value of the put declines as the stock goes up. Whoever went short, they wanted to decline, and you're going to see it's at 61%. Now, what I'm going to do here is I'm going to roll the put, but let's do it together. Now, just like we saw before, what I'm going to do is I'm going to keep that 250. That's the downside protection. We're going to right click on that line, right click, create a rolling order. All that means, okay, is we're just going to buy the one we have back now and then sell another one. If you have ever done retail and you bought a pair of pants and you said, hey, these, I need to exchange these, that's all you're doing. So when you think of the word roll, think of exchange, okay? We're going to create a rolling order, exchange. We're going to buy back what the paper money account has now. We're buying back the July 265, fine. And what you're now going to see is we're going to say, okay, which steer, right, are we going to look at? Well, if we look at the strike that we have now with the delta 19, excuse me, we're going to kind of say, could we go up to maybe a strike of 275? Now, if you roll it, it is a new position, okay? And what we're now going to do is we're going to go up to the 275. That has a delta of 30 to 40 again. Now remember, if you put on this position, what do you think is going to happen with the stock? The investor thinks the stock is going to go higher. They think it is. Now, all we're going to do is going to come into the same expiration. Do you have to? No, you can change it. But what you're now going to notice is we're going to go up to the 275 right there. Now, the language we talk about, the investor might consider rolling if they can do so for a credit. Now, in that case, we are able to. We're going to go confirm and send. And this just shows us right here how the investor can roll it in one fell swoop. Okay, so trade number one was Amazon. Trade number two was actually the position on Goldman Sachs exiting that position. Trade number X, and then also we exited that trade. Third part of that third trade was NVIDIA. Fourth trade was JP Morgan. Some of these are current positions, but we're just trying to extend the trade by entering a new position that has a higher credit / premium and or delta. Now, what I want to do is I want to kind of fast fire through a couple stocks that might be standing out here today. One of the stocks, and I want to ask you a question, tell me what you see on American Express. Now, by the way, if you looked in the credit card space and said, is there any other credit card stock that really looks like American Express? Yeah, there is, and it's COF, Capital One Financial. You're seeing that on American Express, it's not taking to the end of the ascending triangle to finally poke above resistance. Now remember, another Dow stock, okay? And what you're now going to see is if it can break outside that channel, I'm just going to kind of put on a trade real quick, and we're going to look at, let's say, the AXP, and what I'm going to do, and we're going to do this fast, is we're going to pick the August expiration, try to go out a little bit farther, so that way not everything's in the same expiration. And I'm going to look and see if I can do that. I want to kind of see where the liquidity is. I'm going to kind of show something on AXP. I'm just double checking. 30 cents right there on the at the monies, and you got 45 cents there. I'm going to stick to the Julys in this example. We're going to go the 305 and the 310. Now, what I'm going to do, $1.30 debit, and I'm going to widen that out to, let's say, the 310. So it's about 253, 247. There it is. Single count, multiple counts. We're going to go 1 in the margin. We're going to go 3 in the IRA. Okay? Hold it there. So the other stock that we're also going to keep an eye on in the Dow space, Caterpillar, again, industrials. And if we go back to that for just a moment, Caterpillar poking above. The paper money account has the position. It's been sitting there the last couple of days, carving out an area of support. Okay? Could it continue to rise? Be watching the industrial sector. If that breaks out to the upside, which industrial stocks are getting the move? If we go back to Market Watch, visualize, and we go to the S&P 100 and say, show me the stocks in industrials, you're going to see that Caterpillar is dead center, a pretty big chunk as far as what that space actually does. Now, when I fast fire through a couple of the stocks, keep an eye on Disney. Had a mammoth move back to the upside, right back up near the area of resistance. When you look at some of these semiconductors, they continue to march up the hill. You got MU, you got NXPI, okay? Keep an eye on that, kind of right near an area of resistance. Datadog. And the last one that we're also going to kind of keep an eye on, we've talked about that the last couple of days. And the other one is Meta. Meta is another one that's had a flag type trade, double bottom, pushing to the upside and hitting a shorter term high as it's starting to bounce. So now we're not saying every stock looks like this. I mean, just go look at Pepsi, okay? But what you're seeing is some investors are thinking some stocks might be better set up for the current environment to have a potential upward trend. Now, stay tuned for our next webcast coming up right at the top of the hour. Want to give us a quick reminder that you can also go to, let me pull up the page. You can actually, this is my and Barbara, feel free to actually post yours as well. That's my page for X, and I do post educational content there. You can also, for example, go to this page, which is going to be showing us the playlist, okay, well, actually, let me just do this. I'll post actually the playlist as well. This is our page where which you can subscribe right on your YouTube page. So check that out. It's free to subscribe. Now, also remember with what we discussed, it was done for example, illustrative purposes only. Stay tuned for our class on getting started with options. And also, Barbara will be teaching later on today, so join her as well. And also, I want to say thanks for all of your comments, your questions, and your participation. And with that, have a great day. Take care. Bye-bye.